The star of the show was really the CPU story. I know for the past whole year, everyone, including media, has just been focused on the GPU. This is where they'll compete with Nvidia. But over the last 2 quarters, we have been calling out that this is going to be the year of CPU for them, and it did pan out. What's really stood apart was they almost doubled, or actually exactly doubled the TAM for CPU in less than a year than what they had given the numbers just like 9 months ago. They also doubled the growth rate expectations that comes with this larger TAM, again, in less than a year ago, what they provided. So that is what is going to be really driving the growth for them this year. The GPU story, again, is just a 4Q26 or a 27 weighted phenomenon. So this is what is really driving past all the expectations that people had on the street in terms of revenue growth for their overall data center business.
The stock up 17% today, up 95% year to date, and up 325% on a trailing 12-month basis. Just a rip. Market cap $680 billion.
I'm so glad you bring that up because it has handily outperformed Nvidia, which of course has become the benchmark for chip and AI. So when it comes down to that, Kunjan, is it fair to compare AMD to Nvidia, or are investors kind of doing themselves a disservice by always using Nvidia as the benchmark for AMD?
It is fair. I mean, look, that is the only number two GPU provider out there, right? So by default, you are going to compare to that. But what I think people were missing for the last 2-3 quarters, where the only focus was towards the GPUs and not towards the CPU, which is really AMD's bread and butter. This is where they have really made their name and competed against the past competitor of Intel, or the incumbent in that space. So we think need to focus on both those areas, especially right now when CPUs are having sort of resurgence in the AI server market.
Yeah, but also because of this recent surge in AMD, this outperformance over Nvidia, the stock is really expensive. You look at the price earnings on a trailing basis, it's 144 times, and then on a forward earnings, a 59 multiple versus Nvidia's 24 multiple, which, wow, Paul, that looks really, really cheap.
Yeah.
So, Kunjan, in terms of valuations, what needs to change for AMD, or can it continue trading at these lofty valuations?
Well, so remember, they are just starting with they will be just starting with their server level AI GPU solution shipping in second half, right? So when we compare the same stage when Nvidia was also enjoying a very rich premium multiple. So I think as they start ramping these products, as we get into 27, 28, there would be some normalization expected.
Hey, Kunjan, also in your space today, Nvidia has bought $500 million worth of rights for shares in Corning as part of a partnership to expand artificial intelligence infrastructure. What do you make of this deal?
Yeah, so this is not surprising. Nvidia has actually been investing in the optical and the networking component and supply chain stack. They also made investments in Lumentum and Coherent a few months ago. And what is this is when we think about the scale-up networking, this is what you connect all the GPUs together, and this is where the pathway is. The more and more GPUs you can connect together so that they work as a single entity, the better ROI you get, especially when you think about low latency for inference, where most of the spending is going. So what NVIDIA has been doing is really investing in the supply chain stack, in the component provider stack, to make sure they have enough supply, because as we know, that's the biggest bottleneck right now. A few months ago, it was power, right now it's memory, so it could definitely come down to optical components being supply constrained. So NVIDIA is just making investments in the right suppliers that they think they are going to work with, so that they have enough supply as they transition to CPU or optical or silicon photonics starting in 27, 28.
I mean, NVIDIA has a lot of cash to throw around.
Yes.
So $500 million would be a lot for a normal company, but not for an NVIDIA. How long can it continue doing this? Kind of throwing out $500 million there, $2 billion there, to companies within its ecosystem. Is there a natural limit to this?
There is a theoretical limit, but I don't think they're anywhere close to that. Look, they're generating so much cash, which, they are doing significant amount of buyback, but for a $4 trillion company, I mean, how much of a buyback can you keep doing to really move the needle, right? So this is, we think, a better use of cash, investing sort of in their customers, investing in the ecosystems, and broadening their reach across the ecosystem.